Okie dokie, guys. It should be now going live to YouTube. And this, of course, is the Centre for Serious Searching for something special in setups that you've tuned into, otherwise known as Learn to Trade live and free on YouTube. And this is Jeff coming to you live, talking about live from Tasmania in Australia. And we've got Ash sitting beside me, kind of, in Brighton in the UK. G'day, mate.
Hey, mate, how's things?
Ah, absolutely on top of the world. Well,
Yeah.
I'm kind of the Antipodean version of it, you know.
Yeah.
If you stand on your head, you're on top of the world. Here where I am.
Yes.
In truth, I'm not that far from the bottom, to be fair.
No, you're not. You're not too far from the bottom. No, I'd like to think we're a bit, we're close to the top, but I don't even think we are really. We're probably just about three-quarters of the way up.
That's far enough.
Yeah.
In fact, it's way too far as far as I'm concerned.
Oh, Dennis
I
is
like
from
it down
Brighton in
this side.
Brisbane. That's yeah, but probably quite different. I'll tell you what, we were talking about the weather yesterday. It was 31 here in the end yesterday.
Whoa, holy
Yeah.
mackerel. How many
Yeah, it
died?
was. Don't know, but I was at the beach and it was.
And I mean because of heat, not because of coronavirus.
Oh, I mean, I think it was all right. We've had a load of just another nice little bar and an ice cream and food parlor just placed in the beach, just on the beach where I'm near where I live, where I come out. So I sort of walk down from my place to the beach, and just where I come out, they got another new little food parlor. So there was lots of revelers out there, and I think if anybody was going to die, it would have been them. They were out there for a long time, and it was roasting. It was very, very hot.
31.
Sea is still cold though. The sea's still cold. It takes your breath away every time. Every time you go in.
That's the good part.
Yeah, do you know what? It is lovely. It is lovely, but I haven't acclimatized. There's so many people from around here. They go swimming in the morning. They swim all year round. Christmas Day is a big thing here. Going swimming at Christmas, and obviously the sea is bitter at that time. But when you talk to them, they take cold showers. They say they go in enough to kind of get acclimatized to it, and that's what it is. You just got to kind of do it a lot.
I used to. When I was a youngster, I used to take cold showers, but for entirely different reasons.
Meant to be very good for you, mate.
Yes, for some
you used
things.
to take cold showers to get over your hangover.
Well, other things as well.
Oh yeah.
When I was young, it was different.
Yeah.
When I was young.
Yeah.
I suppose we should have a little chat about trading, should we?
Yeah, let's have a chat about trading. Yeah, there was obviously opportunities yesterday which I passed on, and actually, looking at it now, I wish I hadn't. It came down a long way. Actually, sorry, mate, I was just gonna.
Yeah, that's kind of been the story of my week.
Yeah. But I'm all right with it, I've got to be honest. It's it's always lovely to get to catch a big one, but as I said to you yesterday, I've had to get a really good month, and I'm really comfortable with what I've got. And it would have been great to catch this, and don't get me wrong, I think it's probably the trade of the month. So it's like all those little ones that I took actually probably could have been probably half of what I made during the month could have been made in one day.
Well, it looks a bit different from the get-go today.
Yeah, maybe. I'm not getting too excited. I mean, yeah, that was a 5-minute chart, so it started up.
It was an hourly. Right,
yeah, no, we haven't gone anywhere yet. We're caged in this area here, so no doubt that we should be looking for upside. And the only reason we should be looking for upside, really, or the main reason, is because we are oversold down here. I think it's an interesting last few days, because if you look at this on a monthly chart, this bar is in serious risk, has a serious risk of ending as a selling bar, and it's probably just about there now. So it's got a few days to recover, but that closing anywhere near its open, which is down another 60 pips, is going to look like a true negative move is probably likely for the FTSE 100 and probably global equities, because for this one to look like that, the rest of them probably will as well. Looking at this on the weekly, same thing. It's got a couple of days to recover the negativity that this bar is currently displaying. But if that bar ends up looking like that, that's also going to suggest that we go into next week negative. If we go into next week negative, we're probably going to go into the next month negative. So today's bar and tomorrow's bar is integral, really, for the structure of the market and the way it's going to be able to hold on to the gains, I would have thought. So right now it's been, it's the expression for the market, the way the market is expressing itself in the charts is for further downside. So we can't get too comfortable down here, but I would only suspect that there will be an attempt. I mean, look at that, mate. We thought it started not well, but look at this, boom, straight up and down. So I would suspect that we are probably going to attempt, or investors may attempt to get itself out of this hole by the end of tomorrow. But if it can't do that, then the stock market is going to look very, very heavy, and we're going to have to participate in a short as well. But we'll look for the long. Now, what that means is that we're going to have to wait for some breaking, and at this particular stage, it's suggesting that won't happen in this session. In actual fact, as we speak, it's just easing itself back down again. So where does the sell-off end, mate? That's the big question. Interesting looking bar so far on the 5. If this does end up closing below this particular point, I would have thought that the upside probably would be fairly explosive if we then break the high side. So it's got to hold this position to start with, and if it does, and it's a nice negative looking bar, then there could be an explosive move back up again. But coronavirus fears and trade fears have really gripped the market again. So further downside is possible. If not probable, but a bit early to say it's probable. I think we do need to wait for at least a couple of days. We don't have to wait until Tuesday to see what the monthly bar looks like, but we should certainly wait until the weekly bar if we're going to sell this off. If that's not the case, then really, as I say, the only direction we should be looking at this particular stage is up. And if it tanks, we leave it and let the weekly bar form. And if the weekly bar forms negative, then we'll start stacking in on some shorts. But for right now, mate, I'm looking for some upside. With the market a little bit oversold, and also in a position where you would suspect there could be a bit of a bounce back, a bit of an attempt. In saying all that, when you look at this on a 4-hourly, there's probably a little bit more room to the downside that could be seen. Even by the end of today, and then it's possible from there we start to rally and end up with an okay looking bar on the weekly. Now, an okay looking bar on the weekly needs to be near where it opens, so it's got another 100 pips to the upside to really try and get before it starts to look okay again. But a move down, not the worst thing in the world. We can have a look at the move to the downside this morning and into the end of the week, and then we can see whether tomorrow it means that we take the opportunity long. So down here, so it's here or it's here, but I'm only looking for upside, mate.
All right, mate. Happy days. Let's get some pound breakout trade in the market, and boy, do we need a winner. Hang on 2 secs. I've just got an issue there with my chart. Righto, there we go. I'll give you the updated chart very shortly, and this potentially will be the last of the breakout trades before we go into analysis mode, which will be not next week but the week after. I don't think I'll include Monday, Tuesday of next week. It's only 2 days, so we might call it quits after today, despite being behind. All behind as we go into today, of course. All right, today we've got courtesy of Kumar's EA. Thank you very much once again, Kumar. Can't thank you enough for it. And one thing I haven't said, actually, you can manipulate this to go wherever you want it to be. I'm on candle 1 today. 1, 2, 3. This is candle 0. You can manipulate that to go wherever you want it to go. So if you want the high of here and blah, 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 et cetera, et cetera. And of course, we get an automatic entry at 1.2395 for the sell, which is here. The stop loss is 1.2440 for the short. And of course, we reverse that for the long. And I've got no idea why I've still got that up there. Let me get rid of it. Obviously, I didn't type over it. That was yesterday. We had a full loser yesterday. Was it yesterday? No, day before. One day this week.
I was going to say Wednesday's normally the good day, right?
We still had a little loser, I think. We'll go and have a look at it shortly. Well, in due course. Rightos. Oh, that's still wrong. My typing entry price for the buy is 124 12395. That's what it is. Sorry, guys, but you should be able now to read that with some confidence rather than nil confidence, because it's correct now. Righto, what we've got is an interesting day once again. We've got the pivots very, very close together here. So my thought process is definitely going to be with some upside at some stage. When? No idea. If we can take advantage of it on this breakout, happy days. Whether it can go beyond there is another story, of course. If I'm looking to trade the pound today, and I haven't placed this order, so I better do that, then I'm thinking quite the reverse, actually. But we're kind of landlocked or pivot locked. If you can see what I'm seeing, I see daily pivot, weekly pivot, very, very close together. And underneath here, we've got the monthly pivot, which has already acted as support. So yeah, I can see some ping pong going on here potentially, which doesn't really enthuse me, I've got to say. But potential for lower high, lower low, sorry, lower high, lower low, lower high, breakthrough to the short side down to the bottom. And that's kind of where I'm at in terms of bias. Trading that, got to wait for this test. So I've got to get price up to here, maybe break the area, back underneath it, retest it. I've said this so many times this week that it's not funny. And it isn't funny because it won't happen. I keep asking the market to do that. And you know what the market does? It says, go get knotted, Jeff. We're not ready for you this week. So we just stay in a holding pattern. So there we go. I better place that order. We'll go with the buy first up, and entry level 124.40. I've got a heap of possibilities today, and they're very, very much as I've just described on the pound there. Whether they give me an opportunity, the market that is another story, of course. And I can only wait and see. It's been the story of my week, with a couple of opportunities missed. One because I wasn't in front of the charts, and one because I refused to trade it. In fact, I haven't had an entry yet this week. I've had about 4 expirations, if you like, but no entries. Maybe today's the day.
Never know, mate. You never know.
Right, and look, it doesn't matter, actually, at the end of the day. It would just be nice to bank something this week, that's all. Righto, that's the pound. If you want to continue with the FTSE, mate, we'll do that, because as we all know, I do not trade the first 30-minute bar of the London session. So I'll do a bit of analysis when you're done, mate.
Yeah, sure. Well, just a few questions as well. Firstly,
Short on the pound, Dennis. Yep, I'm happy to do it. That's my bias, but
we'll have a
getting
look at
getting
that.
in is the hard part.
Mudlea, is that who you saw? Yeah. Yesterday missed an H and head and shoulders on the SPX and down. Nice sell off. I asked your analysis. Missed. Yeah, you know, the thing is, Jeff and I don't take every single. I mean, don't get me wrong, I would quite like to have been in that myself, but we don't take every trade for a number of reasons. So if your analysis suggested that there was a head and shoulders, Chandra, yeah, if your analysis suggested there was a head and shoulders and you should take a trade, then you need to get in. You know, it's one of those things that as I say, I would have liked to have been on board this move because it looks like it could go a lot further. So I would have liked to have been on board this move. But I have to just take it. You know, I didn't get in, and I have to accept that that I didn't pull the trigger, and it's my job to pull the trigger. But the reason I didn't take it was because I guess, you know, I'm happy with what I've got. I mean, I know it's going to come round again. You know, it's not great. It's sickening to miss a move when you haven't made your money for the month. It's horrible, and it's not great kind of missing this move when
you choke on your porridge.
Yeah, when it keeps going, it's one of those, isn't it? But there's got to be a point where you say, you know what, my analysis is sound. I really like what I see. Yeah, because you're right. There is a head and shoulders here, and you just take it. You know, you just follow what you believe to be right, and it's a bit of a problem. And I do completely appreciate it. You know, when you're listening to other people kind of giving their opinion about trading, there's the head and shoulders there. Then you feel like you need to wait until that you get the green light to go. But actually, there's got to be a point where you say I'm taking the responsibility for this trade and I'm going to go for it. I've done my analysis. Here's my stop level and I'm going to take it, because the fact that you saw it's a real positive. It's really, really good. But you know, we're all missing out on this one, or maybe some people did take it. But if you didn't take it, then you have to hold your hands up and say, I didn't, for whatever reason, I didn't get in, and as sickening as it is, then I have to take the responsibility for that. Now, when it comes down to going down further, it probably will now. You know, it's one of those that's on its way. But that's okay, because it means that if it goes down, then it will come back. This is a massively problematic bar, as I said, you know, at the start of the show. It looks to me like this market is traveling now, and it's going to be tough to get into the downside while this is forming. But if this ends up by Friday looking like that, then look out down below. But it does mean that, so, you know, any pullbacks that we should be trying to get on board, or we just wait for it to flush itself out and come back up again and try and get on the long side. You know, it's just one of those. But yeah, as I said, it's turning out to be the trade of the month. So not a great one to miss for sure. But we just have to accept it. There's many opportunities out there, and there will be. What have we got? So, Sino, there's the dollar Swissy on the H4 and the Kiwi CAD on the H1. Dollar Swissy H4. I presume it was dollar Swissy that you were after there, Sino. Dollar Swissy is on its way on the H4. Let me just check this.
Seems to be a bit of dollar buying about.
Yeah, there is, mate. There is. Yeah, H4, it's a bit lofty, isn't it? Let's just see what it would do on the daily. It's probably got a little bit of room on the daily. When you look on the daily, it looks like it's got a tiny bit of room, but not a lot. I don't think it's through that point yet. Not a lot of room to the upside. There's a few pips. I'd be more comfortable if it was through that area. Could turn around here. the dollar does seem to be strong. You know, the dollar seems to be playing the kind of safe haven, you know, a part in the safe havens today, doesn't it?
Early, very early.
Yeah, it would be a bit early for that one. Let's have a look at the other one. Oh, Kiwi Swiss, sorry, Kiwi Swiss on the H4. And you are looking for long Kiwi Swiss. Here we go. Well, I don't see the long. I see the short. I see the short. When I'm looking at this, I've got coming off the daily pivot. If that's what if you're after the short, then I definitely see that. Let's just see if there's an entry there.
There was an entry on the hourly on that Kiwi Swissy.
Oh, to the downside?
Yep.
Oh, it looks good. Yeah, I think that looks good. That does look good. So, I mean, if this bar ends up looking like that, then that's going to be even more reason to get into the downside. The only thing is, if I look at this on the hourly, does this stop at 0.675 and create an inverted head and shoulders? This is my only concern with this, is that this area here might well hold up. It's going to be tight down there. But and it's not the best inverted head and shoulders, but there's a possibility. I'd be just a little bit concerned about this level here. So just watch out for the price point of 0.6075. You got 10 pips before it gets down there, but just watch out. I'm not saying it will stop there, but just watch out for price action which just starts to move in the opposite direction, because it could create an inverted head and shoulders just down there, because it's possible that this here becomes a bit of a neckline, and you might start to hit a bit of a range again. At this stage, the market seems volatile enough to potentially make some lower lows. and you know, if it remains volatile, then the likelihood is we do go through there. Kiwi to the downside against the Swissy would be good as well. You know, we are in risk off territory, so that would fit the market sentiment. But just be careful of that area, just the 0.6075. I think it looks good enough to me to get down there. But after that, then a bit of caution I would have thought would be wise. Yeah, XBX is dropping again, and it probably will. You know, we got to be careful of the XBX and you know, the FTSE and everything else down here. There was an entry this morning, but it's just getting a bit oversold down here. This is always tricky, because really down here you're trying to get on board of a moving freight train, and it could turn and come the other way at any particular point. Doesn't seem to be anything that's going to drive it to the upside at this particular stage, but it's still Thursday. You know, we got 2 full days really of trading to go, and it might be that this eventually does start to settle down. But you know, you're absolutely right. At this stage, doesn't look like it's coming back, does it? And there could be some further pain on that one to the downside, and it's not suggesting it's coming back. However, when you look at the FTSE, there's a monthly pivot just a little bit below here, about 30 pips below. Might grab the monthly pivot and go back up again, but it's rejected the weekly pivots, and that one's another 130 pips. Yeah, big move. You know, not a nice one to miss by any stretch. But you know what? It's one of those that if your analysis said go short and you didn't go short, one thing you can think is that at least my analysis is good.
Equity market's
Uh,
a bit uncertain at the moment. It's not real sure what it wants to do.
yeah, well, I think because it's an oversold territory down here. There's likely going to be a few investors that are thinking, is this a good opportunity? And they're probably waiting on that. So Shukri, after the US shares, I took the dollar CAD long at 1.3618. A hanging man red bar last night on the H1. Is this correct, Jeff? Broke the weekly pivot, so I'll leave that one to you.
Yeah, nice. I can see it. Absolutely. Your only issue was the weekly pivot, of course. So if you got your entry above the weekly pivot, yeah, nice.
Kiwi Swiss. Oh, okay. Has an up channel on the daily time frame. Let's have a look at that. Kiwi Swiss has an up channel on the daily time frame. There's an up channel on the daily time frame. Could be there.
Oh, is that the candle you mean, mate? Okay, got it. Got it. Sorry, I only read the first part of your thing.
Is that what you mean, Sina, when you say there's an up channel? Are we looking at this this here? If it is, then you might even get that on. No, you won't get that on a weekly. Let's have a look at this on the weekly. That looks problematic to me. I think we might be under it. Yeah, in fact, yeah, you're right. You're right. Kiwi Swiss short does look good there, doesn't it? Let's just have another look at this and see what the channel is suggesting. That's there, that's there. Yeah, I see that. I do see that. It does look good. It does look good. The channel I'm not convinced about, to be honest. Actually, that channel does look pretty good, doesn't it? Just check this on the weekly again. Yeah, do you know what? Do you know what it suggests? I completely concur with that, actually. And what it does suggest is that the monthly pivot might well play a part in this if it comes to meet that channel, because that might be a little bit high. I don't know if your channel's the same as mine even, but that's the channel that I'd be looking at. Just see if I can edit this a bit.
Seagull sound. He plays that. He's got a little digital recorder.
Are they that loud, mate?
Every now and then he just presses a button.
Are they that loud? They're that loud in the background, are they? There you go. That's probably the channel there. That looks a bit better, doesn't it? Which means that the start of it is probably up here. Now that does mean that the weekly pivot could still play a part in this and be within the channel. The weekly pivot does look better in a lot of respects because of this this horizontal level as well. Looks like that might be a factor.
Been nice to be in back up there at the 61.60 mark. They're the trades if you can find them. You know, where you've got the head and shoulders, you've got a right shoulder, and they just keep coming back to match that right shoulder and can't get beyond.
Yeah, but you know what? Now I think 61.20 0.6120. That looks really good. 0.61, between 0.6115 and 0.6120. I'd be a bit more comfortable up there. Not to say that it that you may not have a trade here, and you know, if you're in this one, I think it's okay. I would just watch out for that lower line down here. Watch out for that that particular price point. This 6.75, and if it does come back, then there might well be another opportunity up here. Is there a trend line there as well? Yeah, it's looking pretty good. It does look pretty good. You know, there's no doubt that there's a trade to the downside here, and it's just a question of where. Yeah, that trend line doesn't look great either. It's just a question of where. I'm not convinced it's here. It could be, but I'm not convinced. I think this would be a better spot personally, to be looking at the short on that one. But it does look okay. It does look all right. I think that the longer term analysis on that channel is really good. Well, the problem is Sino. The problem is with channels, trend lines, and Fibonacci to a lesser degree probably. They are to a degree subjective. You know, Jeff draws lines in a completely different place. Often, not every time, but oftentimes he'll draw lines in a completely different place. So they are subjective, and it's just whether you over a period of time draw the lines and say, you know, I've done enough line drawing now to suggest that this is the way to draw them. Because, and the thing with fibs, it's the same with fibs. You know, they are subjective. Really, a Fibonacci is meant to be measuring a retracement. You know, that's what it's suggesting. So for it to retrace, it's got to have a move from high to low. So I'll give you, have you got time, Jeff, for this?
Yeah, mate, you're good.
Yeah. So the different areas that I would draw a fib from, at the very highest point to the very current lowest point would be the first thing. Now we're talking about this area here. So in this area here, the very highest point of the trend of the move down is here, and the very lowest point so far is down there. So so that's why I would draw it there. But other people might draw it from where they see the trend starting, and this isn't really the start of the trend; it's more of an end of another one. So they would draw it from there. So you got sort of two potential ways to draw it, but the other way that that it's quite good, another quite good solid, I think, way to draw the trend line, sorry, the Fibonacci, is the range of the day, the range of the week, the range of the month. So if we were to take that into account, then the second one would be probably better, because it's the start of the trend and it's also yesterday's range. So if we're looking into cutting into yesterday's range, then we would look at this particular point, which, you know, you were right on that one. That does give a Fibonacci right on top of the daily, and also it gives a 61% retracement of yesterday's range on the 61, and then it's just trying to establish whether it's likely to get into that particular movement today. You know, that those price points might be where you'd start to look in the other direction. So top to the bottom of the full move, the trend and the range on the day, which would be top to the bottom, and range on the week. So last week, price was, the highest point of last week was here. The lowest point of last week was, does that kick us into this week, down here? And it was a down week. So again, you're drawing from high to low. So it's from that point down to that point there. And then when you sort of see this on the next week, then you might start to look at these levels as potential. I mean, there's one there, you could say that it did react off a Fibonacci there. Much better in the trend. You know, this is a bit rangy. And then if you look at last month, this is last month's range from the lowest point to the highest point of last month. and it was an up month. So there's the range of last month, and it came and tested the very, very highest point of last month as well. Actually, it's a little bit higher, isn't it? It's up there. Or is it? No, that is right. Yeah, it bounced off the very highest point of last month. There's not really, well, not to my knowledge, Dennis. I don't know of any websites of how to draw trends and channels, but what
Well, I
you
think
what you try.
again, Ash, there's so many of them,
Yeah.
and someone else's interpretation of what a trend line is, and etc. Who do you grab hold of? You know, what do you
Yeah.
believe?
Yeah.
That's the hard part about it.
Yes, it is.
I was taught trend lines from a point of view that they were irrefutable, and I think they are the way I was taught trend lines. But do I use them today? No.
Yeah.
So that's my whole point. They make sense in terms of how you draw them and what they mean, but do I use them to trade? No, I don't. So
yeah, and do you know what? The thing as well with it is, I would, if you're looking at trend lines, the best place to start your trend lines is the most touches between the close and the highs or lows. So if you've got a high here, let's say you got in fact, let's say this one down here, you got a little trend moving to the upside. Let's change this to a 4-hour just so we can see it. Let me get rid of that. In fact, this area will do. So the trend line down here, where are the most touches between the highs and the closes of this? So the first thing, and this is the best way to practice. First thing I would do is snap it on. Now there's a touch there, there's a touch there, and there's a touch there. So this trend line looks pretty good already. It looks like it's been respected. Now let's have a look at the close prices. Now when you look at the close price of this bar here, that's also been respected. Now that doesn't mean that this trend line is better than this one, so we should delete this one. Really, we need both of them. We need both of them to understand that it could reverse here and it could reverse here. Because remember, all we're really doing is trying to get probability. Now the thing with this particular trend line is it might react here because of the daily pivot, so it might not be a trend line there. But it might well react there because of the daily pivot, and it's got a couple of touches. Now there's obviously, so that's the first thing. You're looking at the very highest points and you're looking at the closes. Now there's the third combination, which is a combination of the highest points and the close prices. Yeah, I mean, this one is the closed. Yes, you're absolutely right. That's the open of this one. But the reason that one's on the open is because it's the highest price. It's the highest closing price, if you like. You know, the previous day closed there. I mean, if you want, you can move it back. But it starts to look a little bit scruffy there. But that's where, if you like, that's where the trend started. That was the first move to the downside. So you want to get the highest point there. So if you take the close there, the open there and the open there, then they are fine. And otherwise, you're starting to kind of like get price action, which is popping through. Now, if you're going to look at the close price of a trend, then you can start looking at a line chart. So if we look at this on a line chart, that's what the line chart is saying. But it won't give you anything in the way of tails and price action which goes through. It's just telling you the close prices. And again, if we go back to the candles, then we're going to see 2 bars which have poked through that particular area. So I don't really like doing that. I prefer to kind of like get it on the closest price on the angle which hasn't closed above. You know, there's no close above, there's no body above these. So let's call it that instead. You're either joining bodies or you're joining you're joining wicks, or you're doing a combination of both. And it's really trying to get the most touches. You know, where are the most touches out of the highest bodies and the highest wicks? FTSE 100. You'd probably look at this. You know, with this one here, there's a combination. There's a wick there. There's a close there. Sorry, there's an open there, or a body. There's a wick, a body, and a wick. And then the wick does touch it and goes down. So you're either looking for all the wicks, all the bodies, or a combination of both. And in my opinion, it's probably better to have a look at a combination of both. But you know, I don't think there's any more than that, are they, Jeff? I don't think you could really, if you put it in the most simplest form, then you're either touching wicks or you're touching bodies or you're touching a combination. I don't think there's anything else in there, is there, that you could add to that?
Oh yeah.
Oh, there is.
Haven't got time to go through it. Really, it's a course of its own. You know,
Yeah.
In my course, I take probably an hour to go through trade lines versus trend lines.
Oh, right.
Because they're so important to my strategy. You know, if I don't get if you don't get those right, you've got a very strong chance of stuffing up the strategy. And get bad results. So yeah, they're super important to the way I trade. But I don't, and that's why I call them trade lines, not trend lines, because they're not trend lines.
Yeah.
I'm not depicting a trend. What I'm trying to achieve is, and here's my formula, as many pip perfect points of contact as close to the market as possible. That's it. That's my formula. But to say that and expect you to understand what I'm talking about are two different things. So I have to demonstrate it. And it takes a little bit of a while to get the trend out of the mind, I suppose, because a trend line is depicting exactly that, a trend. And I'm not looking for a trend. I'm looking for a trade. And that's why I call them trade lines.
Yeah. Yeah, I mean, and this, you know, the other way to try and think about it, Dennis, is to try. No, two touches is fine. So as soon as you get two touches, then you can start looking at that potential level being a bounce point. You know, that's what I would look at. But the best way to do it is try and find where it's clean. So if you look at this bar, if you look at this chart here, then you know, Jeff's talking about something slightly different. But if you start with trend lines, so with a trend line, you're just trying to follow it down. Now, where's the trend line here? Well, there's a point here and there's a point here. If you like, there's a point there and a point there, and it reacts. So since you've got these two touches in, 1, 2, then you can look at that particular line as a potential for a resistance zone, and that's what proved to be the case. You know, it has proved to be a resistance zone, and at this stage, if that's proved to be a resistance zone, then for us to trade to the upside, the very, very minimum that we should be looking for is a breakthrough there. And if it breaks through there, then I'd be anticipating buyers to come in if it touches it again, especially, you know, especially if it's on some sort of area. But the significant thing for me with trend lines or any lines you draw on your chart is that they need to have confluence. You know, try and find something else in the area which suggests that that they exist.
Always.
Yeah. Yes. You know, and I suppose maybe that's the key aspect. You know, we could draw as many lines on this as we like, but you know, because I could find a reason here on a line why that's bounced. You know, if I draw enough lines, I'm going here, no good. I'm going here. Now that's starting to look a bit better. Now this one's looking pretty good. Now what this is now suggesting is that if this closes here, now I've got a body. I've got a body why that's I've got a body of a candle which, if it closes there, that's going to suggest that that could hold up. But I wouldn't want to trade it until I got some other confluence. Maybe there's a monthly pivot there. I don't know. Now let's just have a look at the another one here. Make sure. It's pretty close. You could spend all day, but you can see how complicated it starts to get. You know, if you sort of like if you continue to kind of go through these levels here, then it's going to get very, very complex. You know, to sort of to try and there you go. So eventually you're going to find somewhere it bounces. If you draw enough lines, you're going to find some reason it bounces. But that's, you know, how do you come up with that point from drawing a trend line until after the fact? I'd say that's, well, actually, it's not too bad, is it? Because I suppose if you look at it, then this is really this whole range. You know, this is the broadening pattern. But what that is suggesting now is that that we might well have something going on here. There might well be a broadening pattern going on here, and that would suggest that that's the range that we're finding. Well, that's actually not too bad, is it? But you know, that's going to take a. There's no way that I would have drawn that. That I would have started with that. Not a chance. You know, because my eye doesn't go to these kinds of trend lines really. You know, I want to know the most recent price action. So I'm trying to draw lines on the most recent price, but the most recent price action. But it is honestly trial and error. You just want to just draw and draw and draw and draw all over your charts and see if you can start establishing, oh, okay, it's bounced there, it's bouncing there. Because there's always going to be a bounce point. But, you know, as Jeff, as I was just saying, find confluence. If you can find confluence, you're in much better shape. Now, what this is now suggesting, which is pretty good, is that if this does continue to be in this area, now we've got this line. You know, it doesn't mean that this line, we discard this line, but now we've got this line. If price continues to bash around in this area, then we may get confluence if it doesn't break through and eventually comes to a point on the trend line where it meets that that monthly pivot, which is going to be tomorrow morning, actually. So now this is pretty good, because if it continues to just carve out down here, then it is now suggesting that we may well have some confluence on a trend line, a monthly pivot, and maybe even some price down here as well. You know, so that becomes something that we can look out for. But you can only do that if you just draw all over the place, and you know, and see if it comes back to that area. And back to that area and back to that area. And when it comes back to that area, does it meet another criteria, which would be, in this case, a monthly pivot? Is there anything else? Could even be a fib. It's going to be unlikely, because I think it's come down a bit too far. Yeah, it's gone way beyond that, the conventional fibs there. So there's not a fib. Is there a lower line here? No, that's no good either. So, but you know, all I'm doing is just dragging some lines around. Actually, that looks pretty good, doesn't it? So if that was to, if those two were to meet, and it looks like that would meet on that around about the monthly pivot as well, then you've really got some confluence, and it's suggesting just a little bit later into tomorrow. So yeah, I mean, I'd just encourage you just to. Yeah, it is, Dennis. It is really good practice. It's really good practice. I do like having lines on the chart, but I'll tend to do it as I go rather than. Otherwise, your chart can just end up looking extremely messy if they just end up everywhere. So if you do it as you go, then you won't be in too bad shape at all. But you know, let's watch out for this. You know, it might not come back down to this point. And really, what we're looking for now is this is a lower level to buy, or this is an upper level to buy. You know, that's what we got currently going on. And now we found a range, effectively. We found a range between this point and this point. Here we're selling, here we're buying. Breaks through, we're buying as it comes back down again, and we'll find somewhere else that we're selling. You know, so that's really where it all starts from. You know, as well. You do want your range. You want to try and fix your range, but it's okay. You know, do it as you go and see what you can ascertain, and then after you've done that, then you can move on to the next thing. But the order you do things is important, isn't it, Jeff? As well, it's a bit like building a sentence correctly. Where do you start? Do you start with your trade lines, or do you start with I don't know, an indicator or a broader view on a wider time frame?
Where do I start?
Yeah.
Personally, with the pivots.
Okay. Yeah. Perfect. Yeah. So starting with the pivot. So process is really important.
The pivots tell me three things.
Yep.
They tell me the probable direction of the day.
Yes.
They give me support and resistance, and they tell me if the market's overbought or oversold.
Right.
And they're the three things I use them for. Other than
when
that,
you say
a load of crap, right?
when
I mean, what more do you want?
When you say they tell you if they're overbought or oversold, is that because the further price is away from the pivot, it would suggest oversold or overbought?
No. The further the daily pivot is away from the weekly pivot, tells me the story. And that's another part of my course. And yes, Dennis, to answer your question, yes, I do cover my trade lines in the course, definitely, and take hours to do it. Not hours, at least half an hour anyway. But the pivots are absolutely, inverted commas, and pardon the stupid way to put it, they're pivotal in my trading. They're absolutely, they're the gospel, if you like.
Interesting, mate. Interesting. I won't probe you on that, because obviously that's for probably some deeper explanation. Otherwise, it could lead people into some pretty tight corners.
Yeah, look, basically, the further the daily pivot is away from the weekly pivot, in context, everything's in context. You've got to understand what's acceptable practice for that gap, if you like. So if it's acceptable, it's the same as the ATR, right? At the end of the day, if the ATR on a currency pair is 100 pips, then that becomes really easy. Once you've got to 110 pips of movement for the day, what do you want to do? Trade away? No, you don't. Of course you don't. You want to trade back. So there's two things that can change the gap between the daily pivot and the weekly pivot. One's price action. The other one's the end of the week, right? So once that gap gets out beyond a certain level, which is very easily calculated, and again, that's something I teach. Once it gets beyond that level, then there's only two things can happen. Price has to come back towards the daily pivot, or the weekends. The only two things can change it.
Interesting, mate. Very, very interesting. You see, I mean, this is new to me as well. I'm getting a bit of a lesson in this at the same time, which is fascinating. I mean,
it doesn't give you entries.
No, it just gives you that extra analysis, doesn't it? And
it stops you from entering bad trades. And,
yeah.
And I say that's part of my mantra, is my course will stop you from losing money.
Yeah.
And to me, that's probably the first thing you need to learn as a professional trader, how to stop losing.
Yeah. Yeah. I concur.
I can't help you with trend trading at all, can't. But I can help you with understanding where not to trade. And I think that's absolutely, it was the key for me, really. Once I stopped learning that, and of course you still have losers, but you don't have 16 in a row, and you're not burning your account, and that's super important. And the pivots have done that for me. The pivots teach me that, have taught me that.
And this is one thing about another aspect of trading as well, which I think is quite important, is that we want to know how to use. Now, if you become a Fibonacci expert and that's how you trade, that's how you make money, then it's brilliant. It doesn't matter in many respects the tool that you end up using. What matters is that you trust it. What matters is that you know it intimately, because on the pathway there's so many different indicators that are taught. That which do you choose? And the one that you choose initially certainly is the one that makes the most sense to you visually. When you look at something visually, it has a connection with you. But after you get that connection, it's really everybody's responsibility after that to really understand that particular indicator or that particular tool in the best way possible, because it does keep you away from trouble. I mean, that's yours, isn't it, Jeff? Your
Yes.
indicator, if you like, are the pivots.
Yep, definitely.
You know, I use them very, very loosely. I guess, you know, I'm becoming a bit more kind of aware of them and a bit more cautious around them. But I don't use the pivots in the same way that Jeff does. So Jeff's indicator is the pivots, and he knows them intimately enough to know what he needs to look for and how he will then trade around it. Mikey is Williams percent R. I think Justin might be as well. I'm not sure, but you know, a few of the guys are Williams percent R, and that's the indicator they use. And Jeff fully recognizes that the way he looks at the market won't be so good in trend environments, and I'm sure the guys would be the same when it comes down to looking for range environments. You know, looking at Williams percent R in a range is just probably maybe counterintuitive. I'm not sure. I don't know Williams percent R well enough. And you know, Chloe's very good at with specific moving averages, and I think that's the thing. It's really about getting good at an indicator that you can trust. And it could be just be price. Maybe price is your indicator. Maybe patterns are your indicator. It doesn't matter, but the most important thing, and I suppose this is back to the trend lines, Dennis. It's really useful to know about trend lines, but you might actually find that you don't need them. You know, that's the basic facts of trading in a way, is that we can overcomplicate things when things are already working well. Now, I'm not saying that
we're very good at that as human beings to start with.
Yeah. You don't if you don't find a necessity for them because you're making money. I mean, if you're not in that category, that's different, of course, and you need to learn as much as you possibly can to try and find out the best way for you to trade. But if you're making money, and it doesn't matter how much, the most important thing, because if you're making money, if you're making 1% a month, then to turn that into 2, 3, 4% a month is probably more of a money management thing than it is an indicator or a price action or a pattern or a candlestick reading thing. It's probably more about the money management than anything else. So maybe that sort of area needs to be worked on. But if it is about chart analysis, then obviously, you know, we need to know some other bits and pieces. Have you done Jeff's course, Dennis, or are you due to do Jeff's course? Not sure. Well, we know where everybody's at when it comes.
I've got no idea where everyone's at. I haven't seen Dennis in a course. I'm doing Master Traders on, when am I doing that? This Sunday coming up. I don't know what
okay.
I don't know what groups people are in or what access they've got to me. I really have no idea. Now I'll talk about the double cross because on the hourly chart. Let's go to it, Ash, for 2 secs.
What's that, buddy?
We've got a double cross on the hourly according to SWE on Aussie yen, and if as soon as you're done, there's about 3 things I need to cover.
Okay, great.
On double crosses.
Okay. All right, fantastic. Yeah, I am done. Oh, well, that's good, Dennis. If you're with me on price action, I'll also to be talking about trend lines. It's a bit different. It's more about price structure, but it's same thing really. So that's really good. That's really good. So we'll cover that in a bit more detail.
We've got Brian this weekend. Awesome. Expect something left field, Brian. I don't do things the way most people do things. You'll have giants and.
Jeff will be in a Hawaiian shirt, drinking pina colada out of a coconut shell.
All of that, yes. I use imagery more than I use charts. Well, that's not quite true, but you've got to start with the imagery, I reckon. Right, let's talk about these double crosses. Now, there is a misconception around double crosses, I'm sure, at the moment, and we've got to clear that up, because if you go around trading every single double cross that you see, you're going to end up in trouble. Right, the best double crosses are, and Aussie yen at the moment on the hourly chart, you're seeing probably a bull bar crossing the weekly pivot and then a bear bar crossing the weekly pivot in response to that. Perfect. You spotted it. But we've also had one here. We've also had one here. We've also had one here. And probably on another time frame, we've also had one here. It's only the first one. It really is only the first one that you want to take notice of. Because after that, that line, like every other line on the chart, becomes stale. It's no longer valid for mine. That's why on a trade line that I use, once I've had 2 breaks, so 1 break here, 1 break there, that line's no longer valid. It's got to go. POQ, get out of my sight. Don't want to know you, because it's no longer useful to me. It's only useful whilst ever it's doing the same thing. And once it's been double crossed, it's no longer doing the same thing. So it's either bounce or break, right? That's what lines are all about. And that's what levels are all about. They bounce or they break. If they break and are retested in the same motion, that's the double cross. But how can you rely on it here? Look at price here. It's got no idea what it wants to do. So I can't trade that double cross there. I can trade it here, but I can't trade it here. Go back to dollar yen, and we spoke about this on Monday or Tuesday. Tuesday, double cross here, perfect. Except, and we spoke about it, you can't trade into the monthly pivot. That's not a good thing to do. Yes, I know it's invalidated, but it's still there, still sitting there. It hasn't gone away. So it's still potentially going to throw you back in the opposite direction. However, we also said at the same time that if you go to a smaller time frame, which we did on the hourly chart, what did we have? We had a false break of the weekly pivot and the top of the range. Same thing, double cross. First double cross, bang. Did I take it? No. Did I choke on my porridge the next morning? Yes, absolutely. So, but once that's happened, it's all over. You can't do it again. That line is no longer valid. It can still offer support and resistance, but it's, to my mind, no longer reliable as one or the other, if you understand what I'm saying. So for that reason, I can't trade it again. So going to the question, is there a double cross on dollar yen at the moment? Yes, there is. But was it dollar yen? Was that the question? Aussie yen, sorry. Yes, there is, but can I trust it? No, I can't. If it was the daily pivot, I could, because it hasn't had one yet, right? And I'm not saying they can't work. What I am saying is they're unreliable. So the probability, and you know, this is the whole key to everything. For me, other people, doesn't matter. I only talk about me and what I do and what keeps me safe and keeps me solvent. If it's not high probability, I don't want to know about it. And that probability factor goes away once the first one is over. And now I've got to wait for a whole bloody month sometimes before I can actually trust that again. And that's fine. Who cares? There'll be something else. It's not compulsory to trade. That's my whole thing. There was another question like, oh, yeah, okay. And this is also very important. Now, Euro Swissy. We placed an order on Euro Swissy, was it yesterday, the day before, can't remember when, on the daily chart. Yesterday, right? So we've got that order in place. Some of you should or would still be in that if you've taken the trade. Great. On the daily chart, no problem at all. But if that was a 4-hour chart or less, hourly chart, 30-minute chart, you have to expire that trade after you've had 6 candles. No, we've had nowhere near 6 candles on the daily chart, right? But if I'd called that on an hourly chart short, once 6 candles have passed, cancel the order. So you've got no right to be in this trade if it was on an hourly chart. We're in the trade because it was a daily and we can hang on to it. But end of day, get out for sure on those smaller time frames. Can only apply once a month. If it happens, yes, sweet, yes, definitely. Your trade manager cancelled it. Yes, it will, because it'll be preset. It'll have a default setting for end of day. You can change that easily. I'll show you how. Trade manager. No, I don't want to do that. Okay, so when you go in here, you've got an expiry, right? This one's preset for whatever reason to 12 hours and 57 minutes. You can change that to whatever you want. So just go to the date field and change it to another day, or the 30th or 40th or whatever, or Christmas Day, who cares? That's how you do it. So look, that's cost me so much money, I've got to tell you, because I have been expired and I wake up and the market's gone, 100 pips in my favor and I've got no money in the bank. And I go, WTF happened there? And then I go in here and I see I've got an expiry up there. That annoys the crap out of me. So be very, very aware of that if you are using the trade manager. Make sure you know what that's, and it tells you how long before it expires. So, but make sure you do that. It's very, very important. I think I've whinged about that a few times, but I get it. I get why the expiry is there. It makes sense to me. I think I've covered all that. So I'll just have a quick look back. No, I don't have a volume indicator on my charts, Dennis, no. But I don't think it's a bad idea. I really don't. Right, I think I'm done. All right, so briefly through what I'm looking for, right? Now, you would have gleaned about 10, 15 minutes ago that the pivots tell me what to do here. They tell me a potential direction for a session. Now, this is telling me that we're at the weekly pivot. We've got a potential bounce off it, and we've got an untested daily pivot sitting here. That gives me a bias for this session only to go back to here. Now, that doesn't mean I'm just going to say, okay, as soon as we hit the weekly pivot, I put a limit entry order long, because there's far more to it than that. Again, I'm looking for a confluence of some kind. And here I see a confluence. I've got a trade line and I've got a weekly pivot. So if I were to get, say, a break and retest of that area, then I've got license to trade it to the daily pivot, but no further, because my bias on this is short. But I wouldn't just take the whole lot, or I probably would actually on a 30-minute chart. I'd take the whole lot off at the daily pivot. That's the end of the section. So that's the kind of thing that they tell me. So that's one way of saying to you, I'm not going short here, and I ain't for that reason. Aussie is exactly the same. Now I've got to buy short the Aussie because I think the dollar index is going to 98, right? And it's now 97.30. So it's on its way. So this is going to be against my bias completely if I were to trade that back to the daily pivot. But it's the only thing I see that is possible for me right now, because I can't trade away from there, because I know the probability of daily pivot being tested is extremely high. And those of you who are doing the master traders on Sunday, I'll give you an absolute crystal clear reason why that is the case. Cable. We have been triggered long cable. And when I see the daily pivot and the weekly pivot sandwiched together like a toasty, I can almost see cheese squeezing out the end here. There's no way I can trade away from that, because that's double the incentive for price to go there. So until we get to there, I can't trade with my bias, and that's the same all the time. So can I trade it long? Yes, I can. But again, I've got to have a setup, and I ain't got one. Euro yen, sandwiched in between the daily pivot and the weekly pivot. So I need to see this area cleared, get rid of the noise, and away we go. There was a little hint there that this was going to go and test that weekly pivot earlier with a false break, right? You can see it, a little tiddler here. Tough to trade it, I've got to say, because you've got the weekly pivot dead ahead. But that's giving me an indication that this can happen. So I'll be looking for that to happen. But look what the weekly pivot's doing. It's really holding price up. So I've got to get away from here, maybe find a confluence area somewhere else, maybe up here somewhere. So back underneath here, retest it. Then I can go short. And if we don't get through the weekly pivot, it doesn't matter, because why? Because I've taken profit here. That's why. But I don't see a trade there at the moment. Euro Aussie is on its way. And probably too far gone for me to worry about, although there's no such thing. We've got a trade line here. So we've got a confluence area here. So if we broke here and retested the confluence area, I've got a trade to the short side. So there are really some opportunities coming up today that haven't been here for me for the last few days. Euro pound has gone too far. I need to see that pull back. Euro Kiwi is on its way as well. Euro Swissies pulling back for us. That's not the worst thing that could happen. I'm not too concerned about that. Aussie Kiwi is on its way. I've got 2 trades now on Aussie Kiwi. I also placed an order on the daily chart you guys don't know about. I haven't put that up there. Basically, I'm trading that bar there. I don't even have it on this chart. I must have another. I would have, yes. Okay. Let me go there. Aussie Kiwi. There it is. Okay, so there's the order, and the entry, I'll put it on my chart. This is a little bit dangerous, this one. But I've got this thing, and if you haven't got this thing about the Aussie that I've got, then you're probably best not trading this. And the thing I've got about the Aussie is weird, because it's fundamental, and I'm not a fundamental trader. And if you're wondering what the fundamentals are, then they're to do with China. And I've been banging on about it for a couple of weeks, so won't bother going there again. It is a sell at 1.0657. Stop loss is at 1.0697. And TP1 is at, actually that's not true. I'll change that stop loss. TP1 is at 1.0617. And the stop loss is actually a bang on 100 pips, 1.0757. Okay. As I said, if you don't share my my thought process along the China lines and Australia, don't take this trade, because it's technically not great. I do like the fact that it has met the shoulder here. That I do like. What I don't like is the pivots have got it right in a sandwich here. So I've got my entry below the weekly pivot, but it's entirely possible that this thing happens, as it has happened so many times in the past. So adjust your risk if you do want to trade it in that fashion. I think that's probably wise. Yeah, look, it's the same as it's been all week. If we get the right circumstances, every trade is going to be very much the same. It's just we're looking for pullbacks. And if we get those pullbacks, then we can trade. But if we don't get the pullbacks, and price continues to leak as it has done all the week, like the euro, it's just leaked its way down here. Potential entry there I couldn't take because of the low of the day. That entry there I couldn't take, that was the entry, as I said to you guys yesterday. That was the entry to take, and I was away from the charts at that time, because as soon as I finish here, I don't come back to the charts for another 3 or 4 hours. Today I do, because I've got 3 more webinars to do, but that was the trade there for euro US dollar, right there on the 30-minute chart. And you've got to be out by now. If you're trading on the 30-minute chart, you've got to go to support and get out. Simple. So, mate, potential for these to pull back is still there. And if they do, I'll certainly be looking to, and in particular, the pound. Maybe we've got something going with the pound here. Not yet. We can't trail because we were taken in by this bar. We've got to wait for this bar and another bull bar to close before we can trail our stop, which in the first instance will be to there. So I think I'm DONE. How are you doing, buddy?
Yeah, I'm the same, mate. I'm seeing an opportunity long in the FTSE, and I will trade it if I get the opportunity. But I'm just waiting for right now. I don't think I need to do anything just yet. But I will show you that. Right,
the probability is high, Sino. It's high. Well, no, it's not high. It's there. We've already had lots of attention at the daily pivot today, so I'm not that concerned. I think this level is more particular. If we get back through, if we were to close above this level, I'd start to be concerned. But I think we're in good shape here. I think we're okay. One last question from Dennis: how much do I trust in patterns like falling wedges and continuous rectangles? It's another layer for me, Dennis. It's just a layer. So if I've got it there and it adds something to my thought process, then why not? Would I trade it in isolation? No, not on your life. So that's kind of my answer to that question. Ash, I think is probably.
Yeah, sorry. I was just gonna give you the detail here with this this FTSE trade. Looking really good, actually. We just need to see if it comes through this level. This may well be either during the day or in the US session. I don't know, but any kind of close above this area now, if we get another bar or even this bar closing above, then it's likely to react against the weekly pivot. But I will take a long if it comes back again. I won't be looking at the short now. I'll be looking at the long. So that comes back to this particular price point. After breaking through, I'm long. I might consider this point here as well. So I might consider getting in a little bit earlier if it comes back and there's enough room. It's got to go through that. And I won't take profit here. What I'll do is if I can get in down here, then I will just move my stop to break even and see if I can get through. Now, those two particular price points are either a break of this high. You see this trend line again, Dennis? I'm looking at the trend line and also this horizontal level along here. So it's got to break both. There's my confluence point at 61.20. Breaking a hold above that, order's going to go in at 61.20. Coming down to around 60.90, somewhere in that area. And it is an area, 60.92, between 60.90 and 60.95. I'll also consider a trade there. So I have got 2 possible ideas here to take. And I'm just double checking that point there. Yeah, it's probably going to be that one there. So I'm either going to trade this low. That low there at 60.85, it is actually 60.85, because I'm going to look for an inverted head and shoulders there. and that to be the right shoulder, or I will trade the break and the retest of this 6120. So two price points to watch over the coming hours, and I am off to the beach, so I might well miss it. And if I do, then I'll see if I can pick it up during the US session. But that is me, mate. That
Right,
is that.
Just one more thing from me before I go, and I remember now.
Don't build a house on it,
Jobs.
Dennis.
Just call me Steve Jobs. With the double cross, and I can't remember who put that in there. The double cross has been capped by the monthly pivot. It goes back to the same thing I said before. Oh, it was Sweet who said that. Right. So I'll pinch. You're done, mate?
I'm done.
Righto. So it goes back to exactly what I said before. And I think probably what you're saying, Swee, is this double cross here that I spoke about earlier, which we couldn't take because of the monthly pivot cap, if you like. Even if you did place that order, you would have to have cancelled that order by now. That's on a 4-hour chart. So 6 candles. 1, 2, 3, 4, 5, 6. Cancel. Done. Got it? That's my system. You can do what you like, but that's the way I do it because something else has happened, right? After 6 candles. And that's generally the case. And if it's not the case, then you're in the middle of consolidation and you really don't want to be there. So that's why I use 6 candles. I think 6 candles is tons for the setup to play out. If it hasn't played out in that time, something else has happened, or B, nothing's happened. And if that's the case, you don't want to be there. Wait till there's another setup. Okay, cool. Righto, let's all go put our house on nothing, because that's what we put our house on. Absolutely nothing, because that's kind of where we need to be. And if we were to lose, no. That's why we don't trade at 10% plus. Simple as that. Righto, guys. Thank you for the week. Those of you who aren't in the US session later, we will catch you next Monday, bright and breezy, at around about when?
5 to 8, mate, on Monday.
Oh, there's no rhyme for that.
On Monday, don't be late. I.e., don't turn up on Tuesday. No, that's not good, is it? Yeah, we'll see you at 5 to 8.
That's the date. Don't be late. Have a great weekend, guys.